Hello, my name is Mary with Better Day Consulting and Credit Repair. And in this video, I'm going to talk to you briefly about understanding your credit scores, and your credit report, part one. Um, if you going to try to improve your credit scores, then of course you have to understand what your credit score is and how it works. Without this information, you ain't gonna be able to understand it, and you ain't gonna be able to improve because you're not gonna know even what you're looking at or what you're trying to understand. And if you don't understand your credit and your credit score and how it works, you also gonna be at the mercy of these companies that's issuing you credit or telling you how to improve your credit on their terms and at their price. So your credit score is a number. It's gonna let the lenders know how much of a credit risk you are. Credit score is a number that's usually between 300 at the very low end if you don't have any credit at all, or 850, which is the highest you can go on your FICO score. And that lets lenders know that you know how to manage your bills, you know how to pay your bills well, on the higher end. And they can look at you, at what type of credit risk you are. So the higher your credit score is, the better credit risk you are to these lenders, and more than likely you'll get better rates, interest rates, versus the 18 and 26% interest rates on something. You may get 3 to 5%, or sometimes you may get 0% for like a year, or whatever type item that you're buying. So your credit scores that's in the low 600s and below, it's kind of hard for you to find like credit, or it's going to be at high interest rates. So if you had like a 720 credit score, you're going to get some good rates. I mean, credit scores, just like a GPA or SAT scores from like college days and stuff like that. So, it gives lenders a snapshot of who you are and how you're doing in your credit. Now, some lenders, they put an emphasis on your credit score than other people do. So some lenders will work with you if you got a credit score like in the 600s, low 600s. They're gonna work with you, but you're gonna pay higher on the interest rate. So that's why it's best to go ahead and work up until you get to a really decent score, so you have a better interest rate. And some lenders will look at your whole report, not necessarily your credit score, but your whole entire report. You could have like 2 charge-offs and a collection on there and still have it in the mid sevens, but that score is going to only get you in the door so far. But your actual profile, that's the one that's going to make up where the lender is going to give you a good rate, or whether they even approve you or not. And that credit score, your credit score is based on your credit report, the information that is in your credit report, which contains a history of your past debts, your payment, and your payment history, and how much you use your credit cards, how long you done had them, if you got a lot of inquiries, or if you even got a credit mix at all. So all those are computed and goes into your credit score based on the information in your credit report. Okay, this is Mary with Better Day Consulting and Credit Repair. If you want your credit fixed, put Mary Taylor in the mix. And also, if you need a consultation, so we can take a look at your credit report and see what's going on, we are able to do that. You can schedule a consult at creditconsult.betterdayconsulting.com. And I hope to talk to you